Hello, everybody. It's Lenny Murphy with another edition of the Green Book CEO series of interviews. Thank you for taking time to spend with myself and my guest. And today we are lucky to be joined by Bruce Haymes, the co-founder of Stage 18 and chairman of Tuluna Global. So, Bruce, welcome.
Thank you so much, Lenny. I saw your podcast that you just posted with Teddy, I think earlier this week or last week, and it was terrific. So I'm so honored and excited to be here with you today.
Oh, great. Good. So with Ted Tagalakis from
Yes.
Do you know Ted?
No, I learned a lot about AI and market research, though.
Yeah, he's a great guy. So, well, I'm glad. There we go. I can say we have a viewer. So
Exactly.
Thank you. All right. Well, then you know how this is going to go, because we're going to kind of go in the same direction. And we'll just start things off. So for those who don't know you, kind of what's your origin story? Give your bio. How'd you get from there to here?
Yeah. Are you a Dead fan, Lenny?
I am not.
I have to say that you fit right in with the Deadhead community.
What is it? Is it the ponytail? Is that it?
Maybe a little bit, yeah. Well, I am a Dead fan, and I'd say that my origin story has been a long, strange trip. So,
were you trucking the whole way though?
Trucking, and I was space trucking, and we'll get into that in a minute as well. So I'm a native New Yorker. I was born in the Bronx. I was raised down at the Jersey Shore, and I now live in Westport, Connecticut. I went to college in Boston. I went to law school in DC. And, to a certain degree, I feel like I'm an outlier. I mentioned this to you in the backstory to even doing a podcast that might have primarily market research industry viewers on it, because I've had a very varied and eclectic career. So after I graduated law school, I have done so many different things that it's difficult to even list. I've been a lawyer, I've been an operator, a founder, a big company executive, a university administrator, a venture capitalist, and an investor. I've interviewed for executive roles with Elon Musk, sold an in-orbit satellite to a consortium of Arab buyers, and one of my former employers was the subject of America's Most Wanted. So I don't think that there are many market research executives that have that kind of an eclectic career. It's probably hurt me to not be focused on so many things at the same time. But I got to tell you, I've had a really great journey.
That's all right. I really want to drill down to the America's Most Wanted, but maybe you're not allowed to talk about it. I don't know.
No, I can. It's been on TV.
All right, and now I get the space trucking reference because of the satellite, I assume, right?
Yeah. So that's actually a good place to start, even though it's in the middle. Is after about 8 years of meandering around New York law firms and trying to find a place where my thirst for innovation, technology, creativity was going to fit in. And by the way, creativity and innovation and law do not go together. You do not want your lawyer to be innovative. After I knocked around doing that for a while, I went to the partners of my law firm, which at the time was Chadbourne & Park in the city. And I said, listen, you put me together with your biggest tech clients that are going public. I'll do their IPO or I'll do their M&A transaction, and then I'll leave the firm and I'll become your biggest client. And so I had a lot of people working for me in the middle of my career, trying to find me a good high-tech company to connect with. And one of my clients was a company called Pan Amsat. And if you Google Pan Amsat, there was a story in the New York Times called A Widow's Dilemma, where the founder of the company, who was a gregarious rule breaker, a really classic entrepreneur, he had died about, I think about a year after the company went public. And nobody knew what to do with the company. There was no one to run it. There was no succession plan. And the the ownership was in flux, so they tried to sell it, and they did sell it, and my firm got to work on it. So I led that transaction, and we actually sold the company to DirecTV and became a sort of a publicly held subsidiary of DirecTV. It was one of the most exciting industries to be involved in, because Pan Am Sat was the first private commercial satellite company in the world. Long before Elon Musk came along. Pan Am Sat's founder was frustrated with government consortium satellites like Intelsat, like the UN signatory. Intelsat controlled all the communication satellites in the world. And if you wanted to distribute CNBC to Malaysia, you had to contract with this ITU government-controlled bureaucratic entity, and he was just sick of it and wanted nothing to do with it. So he took all the money he made in media, and he decided, I'm going to build and launch my own satellite into space, and I'm going to start sending television programming via satellite on my own. Well, this had never been done before. There was no regulatory infrastructure for them to do it. It took an act of Congress to actually get this satellite launched, but he did it. And then he launched a second one, and then he took the company public, and then he died.
Oh man, what a that's so hence the widow's dilemma, right?
The widow's dilemma. Yeah. So we combined with a subsidiary of DirecTV, and I transitioned from being a lawyer to being a deal guy, corporate development, strategy, partnerships, and things like that. And I had the unbelievable opportunity at the age of, 31, traveling to the most exotic places on the planet that were reachable by satellite, to either try to buy more satellite companies that were owned by governments, or to sell more satellites. And that's how I ended up getting a kind of a masked, blind, unknown caller call from an Arab who was interested in, can I buy your satellites while they're in orbit?
Okay, interesting. And is that where the Nielsen connection came in, because you found yourself in the media business, or am I making a spurious correlation?
No, and I think this also ties into the theme for my career generally, which is one that's built on the foundation of long-term relationships, building long-term connections and relationships that transcend industry and transcend employers. Pan Am Sat was merged with DirecTV, but for those who follow the media industry, DirecTV ultimately was under contract to be sold to News Corp at one point. And News Corp decided they didn't want anything to do with the commercial satellite business that we owned. And Chase Carey, who was the CEO of News Corp or Fox Networks at that time, came to our offices in Greenwich, Connecticut, and said, we don't want you. You're for sale. Go prepare a book and get ready to sell yourselves. And so myself and 7 other executives from Pan Am Sat worked with Credit Suisse First Boston for about 3 months, doing a bake-off of about 30 different private equity funds that were interested in buying into the satellite industry. It was a very profitable business that we operated. So it was highly coveted, and it was a rare opportunity for investors. So we pitched the company for about 3 months, and we were ultimately sold to KKR.
Okay.
And KKR brought in Carlyle and Providence Equity Partners. About 6 months after we sold to them, we re-IPO'd the business for about twice the valuation of our going private transaction, which was a miracle. And then about 6 months, maybe 8 months after that, we sold to Intelsat, that government bureaucratic consortium that had recently privatized to try to compete with us at a massive premium. I think we sold it for about 5 times what we bought it for. And so we were all very happy. Obviously, I was very happy, but KKR was super happy.
Sure.
And KKR and Carlyle had recently bought a company called VNU, which was the holding company that owned Nielsen.
Okay.
And so as part of my exit from Pan Amsat, the partner at KKR, Alex Nabab, invited me to his office to sit down and ask me what my career plans were. And I really had no plans, because the only industry I knew was the satellite industry, and there wasn't going to be a place for me in that industry at that time. And I said to him, I see that you're invested in this company called VNU. I'd be super interested in getting involved with Nielsen, because Nielsen supports the media and entertainment industry with data, and Pan Amsat, the company that we own, supports the media and telecommunications industry with transmission. And so, maybe about a year, I actually did a pit stop at Time Warner Cable for about 8 months. But after that, lo and behold, someone from Nielsen called me, and the rest is history. I was brought on board at Nielsen in a sort of non-specific P&L role as general manager of a new product called Digital Media Manager. And I was able to grow my career tremendously at Nielsen. In fact, I'm very grateful for the experience I had there, because the training, mentorship, and the diversity of experiences I had there prepared me for all the things that I'm doing right now.
Yeah. And so that's the entry into market research, right? And when we connected, you were leading their innovation fund for all intents and purposes. And gosh, 10 years ago or more, something like that.
Yeah.
And remember watching from my perspective, seeing the work that you guys were doing, the bets that you were making on companies, and just being keenly aware of what, one, obviously you were smart and thinking about the future. The company was as well, and driving kind of the next generation of interesting. Now, you were not. Sorry, I just thought of the neuromarketing company.
Neurofocus.
Yeah, Neurofocus. Was that one of yours? Was Neurofocus one of yours, Bruce?
No. It was one where I was told to do the deal and keep my mouth shut. I'll tell you which one was mine. Arbitron was mine.
Okay, well, that was a coup. That was like
Yeah.
that was the Reese's Cup, right? Of like, yeah, why did this not happen?
Exactly.
Sooner? So, okay. Sorry, I have history with Neurofocus and with the founders, and
We all do. Yes.
We won't take that any further.
We will not.
It was fun while it lasted, kind of. Anyway, all right. So you're driving all of that through Nielsen. Now you take it forward. I gave you the softball. So
yeah, I mean, I was doing corp dev again, doing a lot of M&A, doing the arbitrons, doing the neurofocuses. We probably did about 4 to 6 deals per year, of which 2 of them were usually M&A deals. And my group and my colleagues were responsible for identifying opportunities and then executing them. And again, this was just another amazing career opportunity to travel the world and learn about new markets, new industries. Nielsen is a highly complex business, especially when it was combined with Nielsen IQ and Nielsen Media.
Mm-hmm.
And the people that work there, super smart. I might say even smarter and more complex than the satellite industry, which is traditional high tech. And so one of the great things about Nielsen having a global purview like that was being able to learn about all the different business units, all the products, being able to travel to Spain, travel to Japan, South America, to work on all these projects. There was a time though, probably around 2010, 2012, where I became pretty restless doing M&A because I was just known as like the M&A guy at Nielsen, or the deal guy. And I wanted to do something different. And I had recently been to Israel for personal reasons and told my supervisors that if there's ever an opportunity to do more work in Israel, I would love to do more in Israel. I think there's a lot going on there that could benefit us. And one of my colleagues, Itzhak Fisher, who was Israeli, convinced Dave Calhoun, who was the CEO of Nielsen, to allow us to set up a venture capital fund in Israel in partnership with the Israeli government. So I went to Israel probably about 6 or 7 times per year for a year and a half, negotiating a deal with the Israeli government for them to co-sponsor a technological incubator and accelerator and a companion venture capital fund with Nielsen as a corporate venture capital partner. This had never been done in Israel before. Mm-hmm. The program was really innovative. I wish they had a program like this in the United States. The Israeli government would give us 5 times whatever we put against any investment in an Israeli company, and they would take no equity in the deal. So it was tremendous leverage. So if we put $1 million on a project, the Israeli government would stack another 5 on top of it, and we would keep the 33% equity that we were buying in to these startups. So it was a great program. I identified a partner in Israel, and we co-founded this platform. We set up offices outside of Tel Aviv, and I became pseudo-Israeli for 3 or 4 years, getting this thing off the ground. And it was just a blast. We made about 25 early stage investments. We made a bunch of follow-ons. And the objective was really simple in terms of benefiting Nielsen, was to identify disruptive startups that we could capture at a very early stage and co-opt into ultimately accelerating the innovation at our own business. Mm-hmm. And so I always was making investments with an eye towards, is this a business that when it matures, I can buy it out and then integrate it into our own product plan? So it was very tightly tied into Nielsen's internal product development aspirations. And we ended up doing, I think, 3 or 4 of the companies that we invested in at an early stage resulted in purchases either by Nielsen, all of them I think sit with Nielsen IQ right now, or one of them, which is the good bridge to the next part of the story, was purchased by Tuluna.
Okay. All right. Well, although one question I remember, Wiser, Get Wiser.
Mm-hmm.
I believe, yeah, was one of those companies that
yes.
you invested in, and they're still. I don't think they're owned by Nielsen. I think that they are standalone.
Still independent.
Yeah, and doing their stuff. Okay, so now that then you wound that up and moved on, and yes, so now Tuluna.
Yeah, so as part of my M&A mandate at Nielsen, I ran into this very interesting, suave and debonair French executive named Frédéric Charles Petit, yes, who was the founder and CEO of a panel sample company called Tuluna. And he was very interested in picking up our Harris assets. We had bought the Harris Interactive, and we didn't want the European assets. And Frédéric was very interested in them. So we negotiated a deal to sell Harris Interactive to Tuluna. And it wasn't the first deal that Frédéric had done at Tuluna, but it was one of the first ones, and it was certainly the biggest deal that they had done. And he felt, somewhat at risk, in terms of inheriting some risk from this acquisition. Mm-hmm. And so my style is to build strong relationships with people, even if they're on the other side of the table. And I told Frédéric, listen, when this deal closes, if there are issues or you need help, you can call me anytime, and I will make this right for you. I will make sure that this acquisition is successful for Tuluna, because it isn't like I win, you lose. That's not the way that I do business. And we created I think he was very surprised by that. And we created a very collegial relationship. And when I eventually left Nielsen, he started calling on me when he would come to the United States to bounce off ideas about his business. And then shortly after that, I became an advisor to the company. And then he was very gracious to recommend to his investors that they bring me onto the board. And then his investors appointed me non-executive chair of Tuluna as well. And I've been with Tuluna either as an advisor or chairman of the board since 2019. So, quite a while now.
Yeah. And, Tuluna is one of those companies, and yes, your description of Frederic, totally agree. Anybody who has not met Frederic, amazing guy. And yes, suave and debonair. But Tuluna is one of those companies that I think is I was going to say diamond in the rough. That's not the appropriate way to say it. They are underappreciated for the thinking and the innovation and the business that they have done over the years. I just have a ton of respect for what they built, and think why are they not at the same level of some of their competitors overall? And I've told Frederic that, like, I don't know why you're not as big as company X. So you should be, because I think you're doing better work and better business. So although I have a suspicion that narrative is about to change, I think you guys are really in the right place at the right time for the current the current era of AI, et cetera, et cetera. So,
well, thanks for acknowledging that. I obviously I violently agree with you on that point. One of the things that's, again, interesting about Frederic, interesting about Tuluna, and also defines my approach to business, is that Tuluna was a survey company.
mm-hmm.
That was what they were. In 2005, 2008, they were a survey company. In 2019, though, we got together, Frederic pulled his executive team together, and they created a new plan. And they did a major pivot.
Mm-hmm.
And that was comprised of, number one, going direct to enterprises, which was unusual for panels and very risky, by the way,
Yep.
for a sample company.
Yep.
Number two, building a technology platform, Tuluna Start, which is a technology platform that allows them to include many new technological products that their clients can use on a single self-help digital platform. And then third, they embarked upon a strategy of growth via M&A and partnerships. And since 2019, without giving the confidential raw numbers, company's doubled its size. I mean, Tuluna was a relatively small company in 2010. Right now, we are one of the larger companies. We're not punching at the NIQ level that I was used to, but Tuluna is a large player in this space. And I agree with you. I think this industry is going to start hearing more from Tuluna as a result of both their innovation and their size and scale.
Yeah, I agree. And not surprising to kind of share the growth aspirations. And outside, for those who, we're definitely like inside baseball in this conversation. So for audience who's not interested in all this stuff, apologies. The relevance is, well, let me step back a second. One of the reasons I wanted to have you on here is I think the industry as a whole is at a point of transformation. And fundamentally, that means there's going to be deals done. So, right. And there's going to be a series of consolidation plays that occur. And there's going to be a series of growth plays that occur. And we are primed for that. The last time we saw this was about 2019, 2020. Big wave. We're in it, going into that cycle again now. And it's exciting from my perspective, for the industry, because for those that have worked in this for so long, data is the new oil. and we've said that for years, but it's really true now, right? So, so these companies that are positioned well, like Tuluna, to acquire and deliver data, not research per se, not all the trappings of research. That's a piece of it, but data, access to consumers and information, that helps feed the AI beast, and all the transmission that comes with that. I think that, it is. We're going to see some really interesting stuff happen this year overall. And getting your perspective, kind of this inside baseball for the audience, especially we have a lot of C-suite folks that listen. It's going to be interesting times. So anyway, that's my take. What do you think? What do you think this year holds, not just for Tuluna, but for the industry? So
yeah, I don't want to speak for Tuluna, but I agree with you on the data front, and I have been a big proponent of monetizing and commercializing data before OpenAI and Gen AI was a household conversation.
Yep.
But I think one of the things that will be very interesting over the next 18 to 24 months is to see how many traditional market research or res tech companies are able to take their longitudinal data. I mean, Tuluna has 25 years of longitudinal survey history. We probably have one of the best views of the global consumer of anybody. And then you take companies like Kantar, Ipsos, and they're just sitting on mountains of consumer insight data, consumer behavior data, and sentiment data, and train that data on an LLM, on a large language model, and create AI tools that do two things. One is improve the state of the products that our clients receive, so that they're getting a product that is more real time, always on, always changing based on the data that's coming in, and expanding the reach and applicability of what we do. Because right now, market research industry is mostly, like you're saying it yourself, it's inside baseball. It's closed to the market researcher. It's closed to the data analyst or the research coordinator at our clients. But why wouldn't the CFO be interested in this? Why wouldn't at the highest level, the CMO or the CRO or the CSO be interested in understanding how consumers think? And I don't know whether that will come in the form of synthetic personas or it will come in the form of synthetic data itself, but it's coming.
Yes.
And I hope that the incumbents that are in this industry are the ones that transform this industry, and that we don't see them get disrupted by interlopers. But the reality is, if they don't disrupt themselves, they will be disrupted by this.
I could not, in violent agreement. So I'm glad that, audience, you've heard me saying stuff like this for years. Now hear it from Bruce.
Well, I am not from this industry.
Which is why I think it carries more weight for you to say that. Yeah. You have a broader perspective. You've been in the middle of doing deals across industries that were around disruptive technology, is what I've heard through this. So I think that your perspective carries more weight than others.
Thank you. And then in terms of the corporate landscape and the ownership and investor M&A landscape, I think this industry is the industry that Tuluna is in, the industry of Dynata and YouGov, Ipsos, Kantar, Nielsen. It's at a precarious point right now. If you look at it, if you take a step back and you say, well, who owns this industry right now? Almost all of the companies that I mentioned, and all the companies that would be on one of those splatter maps of competitive landscape, almost all of them are owned by funds.
Yep.
Private equity funds, smaller ones owned by VC. And most of those funds, with rare exception, have been in those stocks, in those companies, for longer than they probably want to be.
Yep.
And I'm not going to name specific companies, but I think what we're going to have is a recapitalization of most of this industry over the next year to 2 years,
Mhm.
so that we're going to see different owners, we're going to see different combinations, and I think, and I hope that the new investors that come in with fresh thinking, new capital, and appetite for innovation.
Yeah.
The other thing that I think might happen, because there is the possibility that in some cases there will be a buyer-seller imbalance where there are more sellers than there are buyers
I
into
think we're
this
in there
market.
now. I think we're in that place right this second. So
Yeah. And to the extent that that is the case, I think what you may find is unique combinations of companies. And I think those combinations are a good thing. I mean, they are consolidating combinations. I don't think we're there yet. I think that the investor base of the industry needs to, to see what the lay of the land is and to determine what kind of outcomes they're willing to accept. But I do think that some consolidation will be healthy for the industry, and I think it will help it to reinvent itself.
yeah, so it's interesting as we have this conversation. On January 16th, right this week, the announcement of the Numerator World Panel merger, which I think many of us, that makes sense. I actually expected to see the Kantar Marketplace or Personas in that deal as well, and who knows, maybe that'll happen next. But anyway, point is, right, we are seeing this recombination of solutions. I find it fascinating that Bain is making multiple bets in kind of the data aspect of things. So there may be another company that I think joins that at some point in the distant future, I suspect. So I can say that. I won't expect you to, but I do think we're seeing some interesting recombinations. My concern is what happens to the service companies. And there are an awful lot of those out there as well that are private equity backed. As the industry shifts to understand the balance between data, technology, and service, which has always been a struggle for us, I think, for the industry as a whole. And some of the larger, from that previous boom of private equity, there's a lot of service companies they're going to continue to be service companies. That is the value that they have built. And I am concerned about the investor view of the service companies when we have so much technology and data and AI. I don't have a clear sense on how that's going to shake out. So just my take on that.
Yeah. I mean, I think data is going to be more valuable inherently because it's more scalable. So from an investor perspective, I can make data once and sell it 1 million times, and I can make a service once and I can sell a service once. Or a few times. And I think that's the challenge. And I think even the service businesses have to, start to think about how they can invigorate their models into something that looks more like SaaS and more like software, if they're not going the data route already.
Yeah, agreed. And I think there's indications of that. There's some companies that I see experimenting with. I mean, as well as I do, there's no such thing as a pure SaaS company in this industry, right? It never has been. So there's a few that I know that they bit that bullet. They built in service. They didn't like having to do it, but now they are transforming their pricing into subscription pricing with service baked in, right? And I think that's really smart. And it looks like ARR, it may not be pure SaaS the way we think about it, but they're managing that. And the more that the data drives that service component, then I think that's we're going to see more companies like that that are moving away from the ad hoc engagement into where you're basically your outsourced insights function, leveraging this technology and data asset that we have for on-demand execution and, more importantly, implications. But that's also challenging for these companies that were built on cost plus models. So, it's a huge chunk of the revenue. I think they'll become more profitable, but there may be a reduction in their revenue overall as the cost of projects just decrease. Interesting times.
Definitely. I mean, one of the companies that Stage 18, my company has been working with is Waxy, which I know you're familiar with.
Yep.
And I love that. I love their business model. They are a res tech company and they're pure SaaS. They're a SaaS business and they don't have any data, but they can take a data company or a services company. They can partner with them and effectively convert those companies into SaaS companies for particular clients. So I think that there are bridges being built into SaaS, even for the service companies right now.
Yeah, it's fascinating times overall. So you and I could go on for a really long time. I think this is, I hope our audience is getting as much out of this conversation as we have, but let's kind of wind it down so they're free to go do something else rather than sitting at the edge of their seat. What's Bruce going to say next? Because I know they are. We had kind of topics we wanted to cover. I think we got most of them baked in, but there's a few specific questions I want to make sure we get to and near the end. And here's the big one. Lessons learned from your career, especially this varied career. So, we've got, as well as all this transformation, we have a new generation of leaders that are coming up. Think about them. What would you tell them? What would you tell other folks that are in their 20s, 30s? Instill your wisdom, Bruce.
Try everything. Be open to everything. Don't pigeonhole yourself. Don't ever describe yourself as a this or a that. If you're bored, take chances. I was a lawyer. I was an M&A guy, P&L leader, a strategist, a Nielsen guy, a telecoms guy. The one thing I never let the market do was to define me. And in some ways, this may have even stunted opportunities to advance as far as I could go. I mean, I can recall recruiters found me to be a hard to sell leader because they could not pigeonhole me like that. But it meant that for me personally, I was always learning, always challenged, and always engaged. So I would try as many things as you can until you find the things that float your boat and get you excited.
Good wisdom. Go ahead, please.
And then the other thing that I still do, and I tell my kids they do, is learn. You are never done learning. And if you're young in your career, they're paying you to learn. It's just a continuation of your university or whatever your post-grad experience is. You are getting paid to learn. Be curious. Don't try to be an expert on everything. Stretch what you're capable of and learn. And, I'm finding even now at this stage in my career, I never stop learning. And I try to set an example for my children to go into areas and do things that I've never done before. I think it's really important. And especially if you want to future-proof yourself for the market, we're seeing now, like, Gen AI was not a word in 2020.
Right.
And in 2025, it's all anybody is talking about it in terms of displacing jobs. It is essential that you do not become a Luddite. You have to constantly keep up with everything that is going on. So that's another lesson that I've learned. And then the last thing that I'll add is don't estimate the power of relationships. I really do worry about the lack of in-office time for younger workers and mid-workers. I mean, it's great that I'm talking to you from my home right now and that I can work remotely. If I were a young person, this would be horrible.
Mhm.
You're losing opportunities for mentorship, and you're losing the opportunity to create relationships, because the one thread that flows through all of the strange experiences that I've had in my career are the relationships that I've created. I still find myself connecting with lawyers that I worked with at the beginning of my career. I am still friends and still rely on executives that I went through my leverage buyout with at Pan Am Sat. And my Nielsen network is the foundation for Stage 18's business that I run right now. So if you think that you're just going to tap away at a keyboard in isolation in your studio apartment in the city, and you're going to be building your career, you're not. You really have to get out there and network.
Yeah, all good stuff, and again, violent agreement across the board. That's yeah, that's all good stuff. I was thinking, can I add something to that? No, other than echo it. No, there's some I will add. I don't know about you, but the where I have wound up so far in my life was nowhere near what I envisioned. Hell, even 10, 15 years ago, certainly not 20 or 30. And anything that I would have envisioned then, I would have been selling myself short. Right. So allowing this progression going even in, various places I didn't anticipate, sometimes because, things kind of sucked in some cases, right? I mean, it was like, oh no, my Rock Opera Research, we went under during the Great Recession. Wow, that was not a good experience. I didn't like that, but yet here we are now. So we'll just kind of echo that, Be Teach will be open in my own experience. Somehow the universe just puts us where we need to be if we're open to it.
Yep.
Yeah, we just need to be present and ready and doing our best to be available. My experience.
Yeah, same here. The opportunities will come to you if you make them available. If I were doing what I thought I was going to be doing when I was 27, I would be a bankruptcy lawyer right now. And there is no way that I ever thought that I would be the chairman of the board of a company based in Europe or running my own strategic consultancy.
Yeah. Yeah. Well, I think that the summary of that is that we're both pretty lucky men, Bruce.
We are.
And hopefully our audience can get some inspiration from that as well, because opportunities always present themselves.
Thank you. Yeah.
Thank you. So where can people find you?
Best place to find me is on LinkedIn. I'm pretty active on LinkedIn. I'm also very approachable, and I would love to connect with people. So as I mentioned, the expanding the network is always valuable.
Yeah, I think that's how I connect with you. I just kind of spammed down LinkedIn and you responded, and we just, then did that. So I can attest, yes, you are approachable. Oh, all right. Bruce, anything else that you want to mention to our audience before we close it down?
No, I just want to thank you so much for having the time. It was great speaking with you.
Thank you. And I appreciate you making the time to do this as well. And thank you to our audience for making the time to listen to Bruce and I. This went a little bit longer than we normally do, but I think you'll get some value out of it. And with that, we will end this edition of the CEO series. Thanks a lot. Take care. Bye-bye.